So think about the after-tax cost in minutes, hours, days, weeks, months of anything that you want to buy, given the new student loan rules that exist in terms of income-driven repayment. So if we think about the IBR programs take 10 to 15% of your income based off of your prior year AGI for a set period, 10 to 30 years, depending on what program you are on, if you're on PSLF forgiveness, or even if you're paying your loans back. That's a little bit different analysis, right? Because then it's not really income driven anymore. You're just paying the debt back. But if you're on any income driven plan whatsoever, you are losing 10 to 15% of your income and paying your loans back. Now, what that does is it increases the value of being able to deduct things in your taxes to lower the actual cost of doing certain things, such as, if you can buy a car, if you want to buy a car, it's a lot cheaper if you can figure out a way to run that car expense through your business, possibly through to section or bonus depreciation, if you're able to run leases through your business, etc. So these kinds of things, it matters a big deal if your tax rate is in the 50 or 60% range, which if you count IDR, it really pretty much is. So think about if you're 32% federal, maybe you're making more than 400K as a couple, maybe you're in 5 to 7% state, so you're already at 40. Now add 10 to 15% for income-driven repayment, now you're at 50 to 55. So if you think about, what is the cost of buying, let's say, a brand new luxury SUV, let's say it's $75,000 or so, right? If you are in a 55% tax bracket and you're not deducting that on your taxes, that 75K actually costs you more like 160 to 165K of pre-tax income. So even if you're making, let's say 500,000 a year, that, after tax expense, or pre-tax expense, I should say, right? Because we're talking in terms of pre-tax dollars it takes to buy the 75K SUV, that is taking up about a third of your yearly earnings, and basically about 4 months you're spending going into work to buy that thing. Now, maybe you're a car person.